All right, everyone, welcome back to Beyond the Headlines with myself, Michael Noss, and my co host here, Steve Gomez. Every week, we go through what's happened in the week, and on the headline side of things, we take a look at it from the chart side of things and see what's actually happening. Uh, Kind of a slower week, but some market moving news that I think could continue to kind of shape the theme of what's going on going forward. So, Steve, I know I always look over at the nuclear stocks before we start just to see how well you're doing, and we're getting a pretty good move
Yeah.
again on some of them.
Well, come on over and I'll discuss it real quick.
Sure.
NNE was the trade of the week, and I was discussing with Michael before I came on. I posted that on Twitter, and somebody caught that tag, and they're an expert in the field. I looked at their bio and geo, nuke physics, whatever, and he explained to me why this is a bad call. And I said, pal, with all respect, I'm a trader, and this is a trade of the week. I just want to get 3 or 4 days out of this,
Hmm.
and definitely got it. And before I give it back to Michael, just some more technical indicator correlation as to why I use this particular indicator. So there's NNE. The trade of the week was basically above that high. So a little bit of dancing and boom. But check this out. This is really interesting. If we go in, and this is why I sold 2/3 of it today, right here at this green line. And people who were in the live session with me yesterday on our YouTube feed for Barry's Room heard me in real time say, you know what does the anchored VWAP look like on this? So I took an anchored VWAP snap, and wow, look at that. See how that green line and that purple line marry up? That's where that's where I got 2/3 of my stock off today. That's a wall of that's a giant wall. When you've got an anchor VWAP that's above you like that, and you've spent a lot of energy to get up to it, you best be taking profits. And I'm happy to take 2/3 off there. I can't be more pleased with the way that one worked out. Now, Oklo and SMR are on kind of different time frames. You can see SMR, but here's what I want to point out. This is why I use the 5-day moving average, a la Brian Shannon, using the indicator of 130 periods. You see that?
Yep.
So 130 periods gives me a beautiful 5-day smoothed out average. Look at the correlation of this bounce. Big downdraft, big pullback. Where did the buyers step in? Right here at that test of the 130. We're back on highs as we speak. And guess who loaded back up? Right here in the SMR. I did. I was kind of playing on the same thing, playing with 1/3 size after the daily chart.
Hmm.
Same thing in Oklo, the third of our three that we've been talking a lot about lately, these nano nukes. And again, you guys, it's so simple to build. 130 SMA on a 15-minute chart can give you the general bill of health on a 15-minute chart, much like the 50-day moving average gives me a general bill of health on the daily. That's why they're both dark blue lines.
Yep.
So I try to keep it as simple as possible, you guys. I just look at the footprints in the sand. I don't get caught up with the fundamentals. Just give me a wave to surf, and I'm happy to surf it for a couple days.
Well, and that's I love that idea, and yeah, Brian Shannon wrote about that in like his original book that's got to be knocking on the door 20 years, and it just makes sense, right? I get questions all the time of why a 50-day moving average and why a 10-day moving average and why a 5-day moving average. It's like, well, you got to understand that uh, round numbers were very simple for people when before computers. So they would say 2 weeks, 10 days, very easy to do that math, right? It's going to give me that average 2 week price. Same with a 5 day, it's going to be about an average of a rolling week period. And those numbers become fairly simple. Same with the 200-day moving average, right? There's 252 roughly trading days in a year, but that math becomes way harder. So 200-day moving average. And then you just kind of extrapolate out through time that people have just kept these as general heuristics of whether we're strong or
Yeah,
weak.
I'm kind of using that fractal of the five. You double that, I use the 10.
Mhm.
You double that, I use the 20. So those are three key momentum moving averages for me, and they're simple doubles for the most part.
Makes sense.
All right,
All right, well, let's get into some
enough of that.
fresh news. I think right off the bat we should just go with the headline that you would have had to been kind of living under a rock to not see this happening in the markets. It seems to be kind of the theme for everything. We're seeing gold move because of this. We're seeing copper move because of this. We're seeing silver take off because of this. Just the whole. world has kind of woken up because China has been as a massive, the second largest economy in the world has been stagnating for a very long time. And it seems like this week the government said enough of that. So, for better or for worse in the long run, they're giving stimulus checks. So, they're sending out checks to every single citizen out there. They're lowering interest rates. They're buying back securities. They're doing everything that they have the power to do to affect the economy in the short run is happening over there in China. So, taking a quick look at, the FXI is a pretty good one to look at. So is KWeb. There's a couple ETFs out there. So FXI is going to be your
Mhm.
large cap Chinese names, and these have just absolutely been on fire. You're talking, $25 up to 32 in a short period of time. And from myself as a technical trader, this has been like a 2-year long bottoming pattern base, just a nightmare for everybody as the SPY has been making new all-time highs after new all-time highs over and over again. China's just been hasn't done anything one way or another. So when you're getting these really high volume, really momentum breaks, that's very interesting. And like I mentioned, right, China as a large consumer of things, you can take a look at gold. You can take a look at silver. I know Steve's a big silver fan. Silver's very, very close to a breakout here. Copper, we can just use CopX, which is the copper miners. That's been taking off. A lot of stuff under the hood. So, Steve, what do you think about China trying trying hard here?
I well, I try not to get lost in the weeds of the words and the follow policies. I just look at the charts, and we are entering parabolic kind of blow off price action here. By all means, do not be somebody who wants to come in and say, "Oh, look, China's doing well. I should jump in some new China names." You've missed the move.
Yeah.
These there's probably going to be a lot of give back, I think, after this initial couple gap days, giant gap days. You and I both know Andy's a big fan of China, but
Yes.
he got out a little early, and he won't admit it. But I know he's probably over there biting his lip, just thinking, if I'd have just been brave another day or two, I could have really cleaned up. But I think the move is definitely exaggerated, and I don't know where it goes from here. Probably just a lot of consolidation and chop.
Yeah, I would agree. I'd say, listen, if you like the story now that okay, they're they were this economy that has been doing so well over the last 4-ish, 5-ish years, and now they're trying to do something about it. That's great. But, like me and Steve always talk about, now it's the time to pick your points. I don't think you buy, I'm just using K Web in this and just, I don't think you buy it up here. But, right, if you're reading this on the weekend and you're saying, hey, they're lowering interest rates, that's good. They're doing stimulus and whatever. And I think this China is going to be a long term play, which I kind of do. And mainly just because of the chart, the fact that, we've had this long low base for a long period of time. Quite often, when you get these giant moves out of these bases, these can be ignition type moves. But like Steve was mentioning, I'm not interested in buying any of the Chinese names. I own some, but I'm not interested in buying anything more down here. Like we always talk about, pick your points, right? If you're someone like Steve, you like the 10 SMA, slap that on your chart, put an alert around there. Maybe you do some gap fill, something, right? But it's the time to not FOMO. It's time to be patient, wait for consolidation via price or a consolidation via time, and pick your spots and make a move. But I do think that at least in the short run, finally, this is going to be interesting because listening to some podcasts and things like that of investment advisors who just hated China for years and years and years. It just seems like it's one of those stories that it was hated enough and nobody was investing in it for so long that it almost has to go up. And then now everyone's going to pile in after it's already made its massive move. So might be a little bit of a push from there, but uh, and then down just the last thing is I just there's a difference in China, especially where we can't trust anything that is coming out when it comes to the companies that I like, if I'm going to trade China, this is just again not a recommendation. This is me. I want to stick to things like Baba. I want to stick to like JD.com. I want to stick to these bigger names that at least we know these companies exist and they're making money. And right, it's when you find this like very obscure Chinese name that you've never heard of before, and but they're saying, "Oh, look at all the money we make." I don't trust that, right? So for me personally, if I'm going to trade China, it's the bigger guys out there. I think you're going to get more than enough volatility trading those as opposed to like what I see. I saw a couple of these like LU. I have no idea what this thing is, but they can't even fudge the books enough to say they're making money. So I'm not super interested in those. But I just think you're adding risk on top of risk at that point.
Yeah. It's, you just have to read the charts, but even then, you look at these Chinese charts, and it's amazing what some overnight fudging of numbers can do when we open up in New York.
Yeah. So yeah, just be careful, right? Because that's another point that I didn't think of, but makes perfect sense. Is all of the action's going to happen when the market's closed, right? So you're going to have gaps. It's just going to be the way it works, right? They're going to release earnings. They're going to, and then the U.S. market opens, and that's all of the Chinese markets almost closed. So it just they're risky. So just be careful. But I am participating. If you want to talk about like a safety spectrum for China, I think sticking with the ETFs is fine because again, you're going to get massive moves if this is a
Hmm.
an upward resolution, and you're not going to worry about them like pulling the rug on you. So uh, back home to the U.S. The I don't know where U.S. East Coast and Gulf ports. Again, I'm Canadian, so I don't know where those are exactly, but there's a looming
Houston,
strike.
Louisiana, New Jersey,
Oh, the
North
Gulf. Okay.
Carolina.
So down, yeah. Okay, I got it now. My U.S. geography is very bad. So they must all be one union, I guess. Like the East Coast, and then underneath must be
Longshoremen. Yeah.
okay. So yeah, so they're threatening a strike right now. So we can take a look at a couple things. I don't. It's one of those things that there's threats of strikes so much. I never really care too much until there is a strike. But it's very interesting to look at. So Ship is just all shipping companies. I think you can actually just go boat. I think boat's the
Hmm.
ETF. Hilariously enough, yeah. So boat is just a global shipping ETF. So this you think would be reacting negatively in this case as we are breaking out to new highs, and we have a pretty good looking chart here. But yeah, as I was looking across the board, I'm looking at things like Zim, which is Israeli, but this one's breaking out to new multi-year highs with a 17% short float. I don't know, Steve. Doesn't look like the shipping industry seems to care about this at all.
No, and the longshoremen have always had their rounds of collective bargaining. They're definitely a useful need for the economy, and I will add they're handsomely paid and bonus and benefits. They're a well-paid group and deservedly so. It's a rough job and they work pretty hard, but we are in an inflationary environment right now, so it's really no surprise that you're getting a lot of people probably getting together and demanding that their pace of life and income keeps up with the inflation out there. So they've got a lot of leverage. I'm not surprised they're doing it. But
Yeah.
again, we read the charts, and if boats are going to sit off of shore like they did during COVID, um, who knows? All we can do is track the price of these like ETFs, like you did, and there's no sign yet. And you'd think that that would be baked in by now. So we'll see.
Yeah, I'm with you there. I think if there was, this is, I guess, the overall theme. I'm gonna go big screen for this. The beauty of technical analysis and what Steve always talk about is just think, and we've got one more story to go today. Just think if you were someone who you really believe that you need to understand news and fundamentals in order to trade, what you would need to be an expert in today alone, right? Chinese monetary policy and how that's going to affect the world. And then also these ports and the unions of these ports and the consequences of these ports coming up. Just in today's episode alone, and we've been doing this like probably like 30 episodes now, the amount of expertise that you would need to have each and every episode that we do this to understand the fundamentals behind this. This is why we look at the charts. Like to actually know this, you would need to know the position of the union and the position of the people who are bargaining against the union and how close they are and blah blah blah. So yeah, just follow the charts. Makes your life way way. I always do. I always like that. what's the guy's name? It's like Hide the Pain Harold. There's the whole meme of like, I'm sick of being a vaccine expert. Now I'm going to be a
Oh,
geopolitical.
the boomer, the
Yeah,
boomer guy with the bad teeth,
yeah. I think it's
with
like the
with
same
the
thing. It's
caps.
like, yeah, this week I'm gonna be a right Chinese expert and port security. So Bloomberg is always already yelling at me to get out of this article, but OpenAI may turn public, and what that kind of means. So for me, I'm looking here mainly at Microsoft, and it's because Microsoft currently has a substantial holding um, in OpenAI. So if that ends up going and turning public, I think Sam Altman, the CEO, or I don't know if he's a CEO anymore. There was that whole coup thing, that all that kind of stuff, but he was saying they need to raise up to $3 trillion in funding in order to get ChatGPT and OpenAI to where it wants to be, which is insane because the largest company in the world is worth $3 trillion, and he's saying he needs that in cash from somewhere. And that again, I skimmed that article, but uh, I can't imagine that this news would be bad for Microsoft. You know, we have a buy signal on the trade wave. It's holding above some key moving averages here, kind of coiling in nicely. But you'd think if they hold a big percentage of this company and then they're going to go public, that that could be either an exit for them, or that they're just going to be somewhat correlated to that. I think of, was it um it was Yahoo that owned, there was some weird Chinese spinoff. Anyway, there's been a couple examples of this before where companies, right, they spin off, or they hold things and then part of that holding then goes public, like GE Aerospace and GE Medical and that kind of thing. But yeah, it doesn't seem to be reacting. Do we think this is going to be like another boon for the AI, or is that kind of like a top article, do we think?
Well, I don't really know much about the business structure of these companies. Now, you and I both know we use OpenAI, and coming soon to Trade Ideas, we're
Mm.
going to have an OpenAI GPT interface on our homepage for
Yep.
people who have questions about the product or need support on a product. It's going to be pretty effing cool, let me tell you.
Yeah.
Um, what I find interesting about all of this is I didn't really know that Microsoft had a stake in that. What I find interesting is, what were we talking about last week? Microsoft is securing their energy needs from
Uh,
CEG on the 3 Mile Island. So
yep.
they are seeing a giant runway of demand to build out whatever we're building out for the next, industrial revolution that a lot of people are pretty much saying it is.
I didn't think about that, but that makes sense. And
Yeah.
that probably also spurred OpenAI to say we need more funding,
Mhm.
right? So we can either do it
To build.
through private venture, whatever, or we can go public and we can let the world see our value. So it'll be interesting. Unfortunately, this is just another rant. Um, the IPO market's kind of lame now. I remember IPO companies that would
Mm.
come up like Google when or Facebook when they came out as IPO, and they were still relatively small companies. But now it seems like OpenAI is probably going to come public as a couple $100 billion company already. So it doesn't seem like it's something like, oh, it's going to come public. Finally, maybe I can participate some in the upside. It's like by the time it comes public, that upside's
Yeah.
priced in, right? So let's
You
talk
are
about.
you're the exit strategy
Yeah,
for some
exactly.
people.
Well, and I think that's a good warning for a lot of people when it comes to IPOs, right? We can look at you can look at some of them kind of quickly. It's a tangent, but it's a good one, right? Let's go
Mm.
some notable ones, right? Rivian IPOing at 150 down to 11, right? Look at a lot of these charts. What there was,
Beyond.
Hood, yeah, Hood's coming back there. IPO'd at 35, so I guess you're not doing too bad there. That's
Where's
actually
Beyond?
nice looking monthly chart. Oh, that Beyond Meat, that's BYND. Oof. Yeah, IPO'd 45, initial run to 250, and now it's a $7 stock. Yeah, so just beware. I read some stat out there which I think is really good, that it's like 85% of all IPOs now undercut their IPO price in the first year or so of trading. So if you're
Mm.
buying an IPO that's brand new, you have an 85% chance you're going to lose money at some point. That doesn't seem to be a good one I want to take. But then we have some things like, right, Kava did the same thing, IPO'd, undercut its IPO price, came back through that, and this thing has
Palantir,
been crazy. PLTR, yeah,
PLTR.
same idea, right? IPO'd during the bear market, undercut that IPO price as it comes back through. These are good investments. So, yeah, I guess that's just a little word of warning. Doesn't mean it can't happen, that you can't IPO and have these things run to the moon, but they get, like we talk about all the time, don't fall for the FOMO, right? Have a plan. For me,
Mhm.
I'm actually working on testing some strategies of what if, right? What if I were to buy symbols after they've undercut their IPO, and then you get some sort of close back above that IPO
Wait for
price
a trade wave. Yeah.
and wait for a trade wave buy, right? On a weekly chart or something like that. Could these be good investments? Because the cool thing about them is that when you get something like a Palantir or a Kava or something like that, these end up being like really wicked runners. I've never been to one of these. I don't know if they're big where you are, but I guess this is like a salad store or something. It's like a,
Never been to it.
I don't know. But yeah, so you get Kava, you wait for all this nonsense to occur, you get a trade wave buy right here as it gets back through that IPO price, picks them up, you're still in from what, $39 and 150. That'd be a great little couple year hold for sure.
Mhm.
Oh, that's a little side tangent, but
Well, everybody wants a piece of something early. And I think that's why once they get going and people recognize that this might be something, oh my God, it could be early. I better jump in this. And it becomes a bit of frothy FOMO.
well, I guess I have one more to look at as well, right? We talked about this. We've been talking about this a lot. We talked about it today already, but right? So SMR's IPO, or I think this one was a D-SPAC, was right here. A little bit of
Oh,
initial success and then completely falls apart. And then me and Steve are starting to talk about it and starting to get interesting, kind of back in this area, right? As it's
hmm
we didn't have trade wave didn't exist then, but that would be a nice buy on the weekly chart there as well. Nice run here, and now it's back through that IPO price again. So this could be another one of those. You wait, the everyone gets shaken out, and you get weak hands going on in through here, and when it finally goes, that's when you take your trade. Right, guys, thanks for coming in again. Again, big news stories, but not many of them. So,
almost spilled my
fairly.
coffee.
Oh, don't do that.
Crazy. I'm drinking out of a crazy cat lady cup.
Well,
Don't
there
laugh.
you go. That should
It's
be
the only clean
memed.
one we had.
That should be memed right there.
Oh, spilled too.
Yeah,
Okay.
thanks
Raj will
everyone for
cut
coming
that.
by. If you've made it this late in the podcast, as always, right, give us a comment, a like, thumbs up, retweet, all those things that annoying YouTubers ask you for all the time. We appreciate it. I always have fun doing these, and we'll see you next week.